Do you want to know why he's not texting you right now?
Cause he's about to watch a video from his uncle Charles. Bah! Guys, the SPY has given us multiple up days in a row. Let's count it together, guys. This is the daily chart right here. Each candle represents one day. So we had a red day on April 21st, and from there we had a green day. 1, 2, 3, 4, 5, 6, 7, and today marks number 8. 8 green closes for SPY in a row. And we finally had a close above the 50 daily moving average. Are we bullish here? Well, Uncle's been bullish since we broke out that multi-month trend line, this green multi-month trend line, and it's been pushing up. Okay, as far as the intraday price action goes, not a damn thing happened. So let's go back to the daily chart. See, we've been on a downtrend since mid-February. We had a nice bounce. We had a nice bounce in early April, and Uncle Charles took it upon himself to add some Fibonacci level from February 19th high down to April 7th low. I encourage you guys to do the same thing on your charts. Now today we hit a very critical level. Now while we were able to get a close above the 50 daily moving average, I have to point out that SPY actually hit the golden zone. It hit the golden level for Fibonacci level, Fibonacci trading. And if you're a Fib trader, you know that the 61.8 retracement level is a very critical level. Today, we tested that level. Now, when I was trading intraday, I was watching the 562 and 564 level. Those levels did their job. But on the macro level, okay, 563 was a critical level. And around that area, we had a very strong rejection. Okay, it was pretty strong. But how much stronger will it be? I think we will find out tomorrow. We have NFP and what is it? NFP and unemployment rate data coming out 8:30 a.m. in the morning Eastern time. So that might cause a gap up or a gap down. But let me tell you, now that we reject it and hit the golden zone and reject it from there, if we gap down tomorrow, it's going to look very, very bearish. It's going to look pretty nasty against the bulls, okay? Based on Fibonacci standards here, all right? So, as usual, I'm going to give you guys the bull case and the bear case, the pivot levels to watch out for. Well, that 50 daily moving average is around 557.5-ish. It might slope down a little bit tomorrow because, as you guys can see on my chart here, that orange line, that's the 50 daily moving average, DMA for short. It is sloping downwards. So I'd watch that moving average, because if we start breaking it down, I do have a gap around the 554's level. Go for that gap filling below that would be very bearish, sending us back down to 550, 548. You guys see this uptrend line I have here, this yellow uptrend line. It only has 2 touches right now. But you guys know if there's 2 touches, it's possible we go for a third test. And if we start breaking down those support levels I mentioned, there's a good chance we go hit all the way down to 537 to the 540 zone. Big possibility. It would be a beautiful move to the downside, guys. But we need to break down those support levels I mentioned: 557, 554, 550, and 548.6. Breaking down those support levels, at least on the 15 to 30 minute chart, is your sign to enter puts. Play it level to level and swing the runners if you want to swing. After hitting that golden zone and getting selling pressure, breaking down those support levels would boost my confidence a little bit with the puts. Not gonna lie, okay? But this is a sheep style trading channel. We must be ready for any case scenario. That was the bear case scenario. Breaking back below the 50 daily moving average, breaking back below the gap around 554 would be a good sign that we are pulling back at least down to 548.6. Okay, lower than that, good sign we go hit the yellow trend line. Now, the bull case scenario though, guys. Well, first thing first is staying above that 50 daily moving average around 557. All right. Now, we need to get above 560, 562, and 564. Today, 564 showed selling pressure. And we clear it tomorrow, that will be pretty bullish. Bullish, it cancels out the selling pressure and it recaptures the golden zone. It breaks above the golden zone, clearing the 61.8 fib level would be a massive, massive win for the bulls. Okay? So, I mean, I don't know if it's going to break out. I don't know if it's going to hold as resistant. Right now, all I can do is report what I'm seeing. And it's showing selling pressure. So, tomorrow, we break down those support levels. Really good sign to be bearish, guys. Okay? Otherwise, golden zone clears is a really good sign. We go test that 200 daily moving average, or maybe even hit the 78.6 fib level, which is all the way up at 585. All right, amazing. So now that we know the levels and know the setups, it's on us to trade it unbiasedly. Let's finish strong tomorrow. Triple Q here. I'll zoom out on triple Q as well. It came just a few cents shy. I did the same thing with triple Q with the downtrend with the fib levels. Came a few cents shy of testing the 61.8 fib levels at 487.93, or you can just round it to 488. Few cents shy. It was, 487.18 was today's high, and we got some selling pressure. So as usual, if there is follow through tomorrow, we need to start breaking down more support level. I have a fib level at 477, and then the 50 daily moving average around 475. If both those levels break down, guys, very good sign that we are pulling back even lower. I also have that uptrend line. Only 2 touches. Can we go for a third test? Right? That would need triple Q to break down those support levels I mentioned, 477 and 475. All right? Now, if it's not pullback time, we need to get back above 481, 483. That will put 485 and 488 in play. Above 488, it's a recapture of the 61.8 fib level, the golden zone, the golden level. The 200 daily moving average is around 491. So if that recaptures, that would pretty much be bullish. It would be a big win for bulls, setting us to 492.5 or higher, which is also a fib level. All right, so if you are a bear, you want to see that 488 level continue to hold. Okay, we did get some good selling pressure. So if we lose 477 and 475 tomorrow, if you're a bear, that should make you very happy. All right, NVDA, we retested that 50 daily moving average as resistant, couldn't recapture. All right, we also had some selling pressure from the close to the 115 level. Potential double top here. We got to be careful. This is a double top. All right, we'll know it's a double top when we start breaking down some more support levels. Some more support levels at 110.7, 109, 107, and 105. Okay, we start breaking down those support levels. That could look very bearish. Double top style could send us all the way back below 100. All right, but if we are to be bullish, 112 and 115 must clear. Above 115, double top potential setup is invalidated. Should send us up to 118 and 119.6. Tesla still rejecting from the 200 daily moving average. The market makers are not letting it slide. They're not letting it pass the 200 daily moving average for some reason. All right, I have support at 277 and 275. If it fails, we could go retest this multi-month trend line as support. All right, it's sloping down. It's all the way at 269 now. And guys, if it breaks down, bears take back control. False breakout mode. A rejection from the 200 daily moving average combined with the false breakout would be extremely bearish. Okay, trust no bounce unless we start clearing resistant levels. Okay, right now is around 277. So 280, 282, 284, 286, 288, 290, and 292. 292 being the very critical level. If we are to head higher, that's the critical level that must clear to send us to the 300 to the 315 zone. Coin could not clear that 207 level. They failed to do it, and you guys see this uptrend line I have? Now this actually have multiple tests. 1 test, 2 tests, 3. We had a 4th test on the 30th of April. If it breaks down, it would need, coin to be below 201. Coin's below that right now, so gotta watch out for a bearish breakaway gap. Okay, below 201 is overall bearish. All right, breaking out 199. it should send us back down to 193. That's around where the 50 daily moving average is, and it's also a fib level. And losing 193 would be bearish follow through. That should boost your bearish confidence up, because that should put send coin lower down to 190, possibly all the way back down to 182-ish. Okay, that would be a big move to the downside, guys. Big, very possible. But if we are above 201, that keeps the price above this trend line here, and that will keep 205 and 207 in play, and clearing 207 would be very bullish, putting 210, 211.6 or higher in play. All right, and here is the VIX. Looking at it from the daily chart now. Yeah, I got a little downtrend line here. If VIX is to be bullish, it's going to need to break above that trend line. That requires it to break above 25 and 26.5. All right, so if we get some type of rug pull on SPY, the VIX need to cooperate and go the opposite direction and push us to the upside. Clearing 25 and 26.5 would be bullish for the VIX. Otherwise, I have support at 23.6. If it fails, 22, 20.8, and 19 in play. Guys, thank you guys so much for watching. Remember, you guys are money magnets. You guys are master traders. Let's finish this week strong. Good luck tomorrow. Peace.